started recording. Okay, thank you, Jennifer. So I had introduced myself. My agency is called Malai Insurance Agency. I am an independent insurance agent regulated by the Insurance Regulatory Authority in Kenya. By independent, I mean that I can serve various insurance companies at the same time. I can compare quotations. I can and I serve the interest of the client most of it all the time. So that is my IRA license. All insurance agents are licensed by IRA. So far, I partner with 12 insurance companies in Kenya. I'm the founder of Malai Insurance Agency. I have a BCom from Strathmore University, a COP from College of Insurance, which is a mandatory requirement for all agents, all insurance agents in Kenya. And I'm currently pursuing accreditation from the Chartered Institute of Securities and Investments. I'm also a member of the Kenya Professional Insurance Agents ACPIA. So today, talking about medical insurance. Medical insurance basically is to help you mostly in situations of emergencies. When emergency occur is when the medical insurance is critical for you, especially okay in this country mostly, because sometimes it does not meet all your medical expenses, but it helps you not to exhaust your financial savings. So it protects your peace of mind so that when you know that your family is taken care of in case of any uncertainties. And it can help you gain an emergency admission, because in most hospitals, especially tier 1 hospitals, even if it's an emergency, they always request for a down payment. And sometimes maybe you would not be able to have the down payment as soon as the emergency occurs, because no one anticipates that an emergency will occur. No one knows the time. So being told to pay upfront 200K so that your loved one or even you get the admission, sometimes it's not usually reliable. So a medical cover comes in to help you. It can give you express admission even to ICU. I think that's why medical insurance is important. So today we'll talk about the Jubilee Health medical cover. Some of the benefits it has is that it has a comprehensive coverage. It covers extensively pre-existing conditions. However, there are waiting periods, which you will see later on. It covers newly diagnosed chronic conditions under inpatient and outpatient. It has an inbuilt COVID cover, inpatient and outpatient. It has an inbuilt annual general checkups for members and spouse. It covers maternity, although it's an optional cover. The first emergency cesarean section is also covered. Dental and opticals, although they're optional benefits, and iron rod evacuation, last expense, and there's a free personal accident for the principal member, or even last expense and free personal. They're only free from the member and not the spouse or other dependents. But there's an option of adding. So eligibility, the standard cover. This means people who are. I think Winnie had asked about eligibility. For the standard cover, is a term baby of 38 weeks up to 64 years. From 64 years, 65 to above, if you are in daycare, in the standard cover when you are 64, you easily transition to the seniors cover for a lifetime membership. So that is an extra advantage for members who are over 60 to get onto the standard cover, because it gives you an express entry to the seniors cover. We have a junior standalone cover for minors who are 0 to 17 years. And then we have a seniors cover, which caters for members who are 65 years and above. The main thing in a medical cover we need to know your name, your date of birth, which will determine your premium and your limit, your gender, this is mostly for registration, your ID copy, your KRA copy, KRA PIN certificate copy, and your family size. These are the basic requirements. Another benefit is that it has a wide geographical coverage. The panel of Jubilee is quite extensive, and not just Nairobi hospitals, even countrywide. And then there's an option for overseas inpatient referrals and direct access to treatment within East Africa. So it's also flexible. There are 6 levels of comprehensive coverage, and there are optional plans. So, and then another additional offer is that they have digital smart cards, which means that is one less card in your pass, so that it's not compulsory that you have that card when you're going to hospital. Sometimes you can forget. So the digital smart card comes in handy, and you're able to access medical care anytime you need. There's an annual medical checkup and 24/7 telemedicine consultants. This is through Live Your Health and Sasa Doctor. At this point, I'll stop sharing my screen. Please mute.
A warrior may get wounded in battle. But he should never turn back and flee.
Are we still together? I'd like to share now the calculator. So I had asked for volunteers. So Winnie was kind enough to volunteer her mother. Her date of birth is 1960. She's 62 years. So this is the calculator that we use to determine the premium. I hope Winnie's, are you on? I hope she's on call. So we start with the date of birth. Compulsory benefits inpatient, yes. So inpatient is a shared function per family. But since she's alone, she'll enjoy the inpatient alone. Another optional benefit is copay, which I've included, yes. Outpatient, she also requested for the outpatient to be included, then dental and optical. So by the flexibility, the 6 levels of limits, this is what I meant. We have the Prestige, Royal, Executive, Advanced, Premier, and Classic. So Winnie had requested for the Royal, which is a 5 million limit inpatient. Outpatient was 150,000. The total premium comes to 156,097, which is payable annually. Are we together, or have I gone too fast?
We are together.
You're together? Thank you, Jennifer. You're together?
Yes, we are. I'm not sure other people.
Sorry?
We are together.
You're together. So this is what it means by inpatient limit. The premium is 5,000. And if it was someone younger, say how old? Someone who is born 1980. Just a moment. So 1982. Yeah, they're 40 years. You see how the premium changes? I hope you're together, all of us. For the classic limit, they get 49,000. For the same limit royal, which is an inpatient limit of 5 million, they get 107,965,000. That is the annual premium. So that's why medical insurance, your age is really a determining factor to the amount of premium that you pay, and also the limit that you choose determines what you get. So let's go back to Winnie's mother, Regina, who is 62. Comes to 156.97. So are we together? I want to stop sharing this screen.
So Valentine, do you mind me asking?
Yes, any comments, any question from now, from at that point? Yes.
Yes, I do. So
Yeah.
basically, so for the royal, so you'll be paying 156,000 yearly, right?
Yes, yearly.
Is that is there any option for payment plans for anyone?
Yes, there is an option for payment plan. It's called insurance premium financing, which you partner with, Jubilee partners with a third party, which is a bank in this case, and you're able to make 4 installments. So the 156 will be divided into 4 installments. So the insurance, the bank will pay the insurance company full premium, and then you remit checks in 4 installments to the bank, which will attract a small interest because of the third party arrangement.
Okay.
Any question regarding the calculator? Winnie, are you on board? Maybe you could ask a question.
Maybe as Winnie asks, I have a question. Sorry, my background is a bit noisy.
Yes, Eve.
Yeah, so my question is whether you can, if this premium is too steep, whether one can cherry pick. And what I mean by that is, can I omit dental? Can I omit optical and just be left, let's say, with inpatient only?
Yes, you can. Actually,
so
you can.
So will the figures remain exactly the same, or they will alter?
No, they will alter. So we start with removing outpatient.
Yeah, so let us assume I don't need dental, I don't need optical, and I don't want outpatient. What happens?
Yes, so if, first of all, dental and optical are only available if you want outpatient. So if you don't want outpatient, both of them will be out. No. So click outpatient, no. Dental, optical, no, both of them. So you see how the premium changes? It comes to 69.
The initial figure was what?
Was 156.
And it has changed? No, I mean the original figure against inpatient.
Against inpatient. Just a
when
moment. Let me add them back. You see, it comes to 156. 156.
So the inpatient in this case was
for the royal. Yes.
For the royal was 69. Yes. I'm looking at inpatient, the inpatient figure.
Inpatient figure alone. So you say no. Okay. Yes, it comes to 69.
Okay, so that would be the total premium paid.
Yes, total premium paid 69.
Yes. The other thing is that you've talked about bank.
Yes.
And said there's a small interest. How small is this interest if you're using the insurance financing?
Insurance financing.
Yes.
Derek, if you could jump onto that.
Maybe you could repeat you could repeat the question. I missed it a bit.
Oh, she's asking if she opts to go through IPF.
Yes.
How much would be the interest charged?
The interest varies depending on the total premium payable. So it varies. It's a bit flexible. I don't know if Angelina is able to project the NCBA rate card. but it depends on the amount of premium that is being payable. I know for figures between 20,000 and 100,000, it could be an interest of 5,500. After that, it's graduated somewhat. So the rest we need to actually check on the document. Thank you. And then also just to go back a bit, Valentine, the question that was asked on flexibility of benefits. Benefits are flexible, yes, but let's please remember that inpatient is compulsory. So you can choose to have inpatient only, or you can choose to add inpatient and these other benefits depending on the different combinations that are there. Thanks.
Okay, and then my last question was if you could just comment on that last expense option.
On the last expense?
And whether the limits vary across the different packages of Prestige, Royal, Executive, and so on.
Okay. Oh, you see that in the brochure as we go to the next session after this.
Okay.
The last expense, yeah. Winnie, I can see you.
Okay. Hi, my question is, can you hear me?
Yes, yes.
Okay, my question is, when you're covering elderly parents, do you also cover like end of life in terms of funeral expenses and stuff like that? Or it's just basically medical cover? Because in my thinking, especially when you're covering elderly parents and yeah, I would also want to consider that. Is that something that you put in consideration with the medical cover, or that is separate?
Actually, we do, because for them, if they're the member, like in this case, your mom, she's the member, the last expense is free. The last expense and the personal accident are an additional cover to this one. But if there was like a spouse or dependent, then we would have to include yes for last expense to cover the dependent, and yes for personal accident to cover the dependent. I don't know if we are together, Winnie, but since she's the only one, it is an automatic, it is covered in the medical insurance.
So if my parents, both my mom and dad are alive and of course they're married. So when we are doing the cover, it's for both of them.
Yes, it will be for both of them.
Because what if one of my parents is out of the country and one is in Kenya? So the one who's out of the country is already covered somewhere else. So I just want to cover my dad. What happens?
Oh, you take the cover for your dad only.
Or which is allowed, right?
Yeah, which is allowed, yes.
Okay.
One person only. Yeah.
Okay, yeah, that's what I want. So you said the last expense is free, personal accident is free. Okay, that's what I wanted to know. Okay, thank you.
Yes.
Maybe Valentine, let me chip in, especially on the last expense. Just to echo what you just said, the last expense is a funeral expense, just to cushion the family from funeral expenses, but it ranges from 50,000 to 100,000, depending on the specific cover that the client has bought. So meaning the higher the cover, if somebody takes a 10 million cover, for example, the last expense will go up to 100,000. Somebody takes a 500,000 cover, inpatient limit, the last expense around 50,000. So it is, I can say it's like a value add, but a client can also take now a different last expense cover differently apart from the medical insurance. So those are two separate benefits, but the inclusion into these is pegged on a value addition to the client, and it does not come at a cost unless there are dependents who need to be taken that cover. Back to you, Valentine.
Yeah, thank you for that.
Valentine, do you mind if I add something?
Yes.
I cannot see any international treatments here, as you had mentioned earlier.
We are moving on to the brochure. Just a minute, you'll see it. Anyone else with a question on the calculator? Are we good?
Maybe not a question on the calculator per se, but something you had mentioned that when if the senior had already been covered by Jubilee previously and they transition to above 60 while within, that's an easier transition. Are you saying that the premiums are cheaper when it is a continuity? First of all, is that what we are saying? And then secondly, after they transition to above 60, if for whatever reason, in 1 year they have not paid up, do they still remain eligible within, or they are treated as newcomers?
Still eligible. I think I'll invite either Derek or Angela to talk about loading on the cover to explain the transition. And it's not 60, it's 64. It's 64. So either Derek or Angela to comment on about loading and the express entry to seniors.
Angela, do you think you can tackling that?
Maybe to clarify on the same before Angie comes into place. When a client is, once the client is a Jubilee client, and this client is in our books, like the client has been renewing cover without breakage, then the client transitions automatically from the standard cover to the seniors cover. But the premiums paid at that time will be dependent on the claims history of this client, because there is a history of claims, past claims. So that is why there won't be no breakage, or it will, just to quote what she said, it is cheaper for the client to transition because we have a history than for a new upcoming senior client. I hope that clarifies it. And then number two, the second question was on if a client does not pay for 1 year, if there is continuity of cover. The current acceptable time span after lapsing of cover is 1 month, but which can be extended to some instances to 3 or 4 or 5 months, depending on the feedback from the client. For example, when there was COVID, a client can say, right now, due to COVID, I'm not able to renew my medical policy, but I can ask for 3 or 4 or 5 months grace period, so that by the time this client is coming to renew cover, the client comes as a continuing client. So meaning waiting periods won't apply for that client, so forth. But the challenge comes when the cover has lapsed, and then the client goes mute, and then comes after 1 year and says, I was with you maybe last year. So that is the instances where we will be having, we will not be having the current history of this client for us either to waive waiting periods or to apply the standard premiums. I hope that clarifies the query. Back to you, Valentine.
Yeah, it does. Yes. And also to add on, you see, if in that 1 year when you are away, a lot of things could have happened. Maybe you developed pressure, you developed another pre-existing condition that was not there previously. So you're not coming back the same way you left that 1 year. I think COVID has shown us so many things can happen within a year. So that's why they will term you as a new person. But if you have been consistent, they know your claim history. It is easier, it is cheaper. Anyone else with a question on the calculator as we proceed on, or we proceed? And proceed. Jennifer, how am I doing on time? Am I okay?
Still okay for now. Since we've been asking questions, so yes, I think we have plenty of time.
Okay. So let's move on.
We have until past, just to let you know.
Okay.
Yeah.
So I want to show. Share. Take care. Just a moment, I want to share the brochure. Just a moment. Okay, got it. Okay. So from the calculator, we move on to the brochure. This is where I explain the limits. So the 6 limits, we have the classic 500, premier 1 million, advanced 2M, executive 3M, royal and prestige, which is 5M and 10M respectively. For the inpatient, the overall benefits limits per family per annum. I had mentioned inpatient is per family. So it is an advantage if you take a loan, the whole the whole overall limit becomes yours, but if you're per family, you share the limit with your family. We have a COVID-19 coverage, which is same for all the limits. Now, pre-existing conditions. So pre-existing conditions attract a 1-year waiting period from inception. So if you take a cover, we're in July, it will have to be until July next year. That's when you'll be able to get treatment from the pre-existing conditions. This includes hypertension, diabetes, hemorrhoids, and the rest. So this is where the limits come in. Now, if we use Winnie's mother, the the royal inpatient 5 million. For pre-existing conditions, she can only be admitted up to a limit of 1 million. That's where the difference comes in. The difference comes in with the limits. Are we together? For cancer treatment, it attracts a 2 years waiting period. And for the limits of royal, it will payment will be done up to 2.5 million. And if it was a member and a spouse, both of them, they'll be able to only utilize 1 million of their cover. But if you're alone, you use 1 million of the cover alone. So for people who are over 60, 64, seniors cover, the higher the limit, it is advisable to take a higher limit so that if they have pre-existing conditions, they're able to be catered for efficiently during inpatient treatment. And then confirmed newly diagnosed chronic conditions after 3 months of cover inception. The limit is a bit higher, 2,500. Oh, sorry, for cancer treatment, it still be 1 million. Still be 1 million catered for. The newly confirmed diagnosed diseases after 3 months of cover inception will be 2.5 for the royal limits. Psychiatric conditions, they have a 1 year waiting period. The limit covered is 500. Prematurity for child born with an existing member who has completed 1 year waiting period on maternity benefit. The maternity cover is optional, but when you choose to add it on, it has a 1 year waiting period. So for the royal limit, although Regina's mom doesn't qualify for maternity, but if she was on childbearing age, this will be the amount that will be catered for. Bed limit per day NHIF rebate will be applied on limits shown. For general, The classic, you take a general bed. Executive to prestige, you are entitled to a standard private room up to 12,500. So even if you still have even if you have a medical cover, you are still required to make your NHIF payments. You're still required to have an active NHIF, whether you're employed or doing it individually. For employed, I think it's compulsory. Your employer will remit. Individual, it is 500 per month, 600 per annum. So the insurance comes in to pay less of NHIF rebates. The first emergency cesarean section is covered. Those are the limits included for the principal member or spouse. Subject from the date of purchase as subject to purchase of maternity benefit. These are the limits. The higher the limit, the higher the package, the higher the limit. So lodger fees for a parent accompanying a sick child member up to 10 years. All the limits cover a child. Physicians, ICU specialists, it is covered, all limits. Inpatient covered. Surgical appliances are covered. External aids are covered. Inpatient, non-accident related dental surgery, 1 year waiting period. Inpatient, non-accident related eye treatment, 1 year waiting period. Mostly for inpatient, the limits that what you need to know is the pre-existing conditions and the waiting periods. The 1 year for pre-existing cancer, 2 years, and then the newly diagnosed conditions, 3 months. Are we together? These are the main ones for inpatient. Anyone with a question for inpatient? HO, you have unmuted. Do you have a question? And then the optional, the outpatient benefits. For Royal, it will cater for 150,000. So outpatient is usually per member. Inpatient is per family, outpatient is per member. So if you are a family of 3 and check the royal package, the inpatient will be 5 million for all the 3 of you, but outpatient it will be 150 for each one of you. Are we clear on that? So for outpatient, what you need to know here mostly is the pre-existing conditions, also 1 year waiting period, consultation for specialists and on referral only. This is covered on doctors on panel, and consultation fees for for a GP doctors on panel to be covered. COVID tests for symptomatic cases at designated facilities. This is an added cover that has been that was added as a result of the pandemic. And then there is KP baby-friendly vaccinations are covered for all the limits. Physiotherapy, routine prenatal, occupational and speech therapy, pain management, family planning cover, limited to long-acting methods such as intrauterine contraceptive device, IUCD, and no implants only within outpatient, sorry. Then maternity benefits, which are optional. So every package has its own limits, as I had mentioned. Then benefits cover under maternity are 1 year waiting period, excludes expenses related to the newborn. Then there's the optional dental benefits and optical benefits. These two come as a package. You can't take dental alone or optical alone. They come together. It's either you have the 2 of them or you have none. What is this? And we have an enhanced COVID-19 cover, which is optional if you want an additional COVID cover. Maybe you are someone who is highly exposed. you can opt for an additional COVID cover. So value addition, I had mentioned the automatic enrollment to the Jubilee Wellness Club, the telemedicine services, the Livia Health and Sasa Doctor, which they're available on Google's, on Play Store and even on Apple, and then drug delivery services. Are we together there? Any question? You can just raise your hand, or you can give me a thumbs out for confirmation if you're together.
Maybe Valentine, as we wait for a question, if there's any.
Yes.
I just want to emphasize, if there's any take home, maybe the members will take today, apart from all the general goodies for medical cover and what you're presenting. The part where you presented on distribution of benefits, because one fallacy or mistake many clients make when they are purchasing medical cover is the assumption of how it works. And I think that's where you picked up on pre-existing conditions, chronic, congenital, HIV and AIDS, and what have you. For me, that is the biggest take home, because that's what gives my colleague Mandela here, the care manager, a bit of headache. I'll give an example. Say a client takes a cover for 5 million. In our minds, if you're not keen or you've not been sold to the product well, you'll assume that at any one time I have 5 million bob available for me in hospital. Then God forbid you've gone through the 1 year waiting period, so in the second year and above, and you fall sick, and say the condition is something related to diabetes. Okay, so I don't know what the sublimit for diabetes would be there on 5 million. I think it's about 2.5 million, if I'm not wrong, after the 1 year.
1 million.
1 million, huh?
Yes,
and say the bill comes to say 1.6 million, and then my colleague Jubilee and my colleague Mandela authorizes, and the bill is paid up to 1 million, and the client is asking why, and I have 5 million, and you promised to pay, so why must me and my family look for 600? So that is usually determined by what Valentine has just presented, that part. So even as she shares the brochures maybe after, please be keen on that part, and as you choose which package you'd like to take, be keen, of course, dependent also on your financial ability, be keen on that, because that's the biggest take home. Don't assume, say, I've taken a 10 million cover, so I have 10 million at one this time. 10 million would be for what you call accident and acute conditions. Acute conditions are things that we can't really predetermine. They come just by the way. Thank you.
Thank you for that, Derek. I think that's usually the main. Yes. Jennifer? Yes?
I'm saying thank you, Derek.
Yeah. Anyone with a question on the sub limits, the limits? So I had gone through all of this. So general conditions. There's a general waiting period of 30 days for new entrants on illness claims. So if you're on board a cover like today's on the 28th, you'll be able to use your medical card on the 28th of August. And then for MRIs, CTs, and PET scans, you require pre-authorization since they're not emergency. Any surgery or treatment that is not emergency, you would need to seek pre-authorization. I think hospitals are usually very keen on that. They'll be the ones doing the pre-authorization themselves. So for you to save on your headache, also you can just ask the insurance company before you go to hospital, so that you don't reach there, you have already set your mind, then they tell you you're not able to do this. Cancer waiting period, we had talked about it, 2 years waiting period, pre-existing 1 year waiting period, maternity, 1 year waiting period, And then premiums will be based on the age of the applicant. I think I mentioned this. Medical insurance, especially your age, determines a lot on the premium. Then eligibility for the main member and his or her dependents from birth, which is a term baby of 38 weeks to 64 years. I mentioned this at the beginning. Existing members who are 65 and above are smoothly transitioned into our seniors package and covered for life without any age restriction, subject to annual renewal and underwriting review. Minors, children below age of 18 years come in as principal members under the JCare Juniors plan, subject to applicable rates. However, if it is a minor, here, these are on number 7, dependent children over 18 years are covered up to 25 years old with proof of schooling. So I think most insurance company have, so someone who is like 24 years, they have not yet gotten, they're still your dependent and they are still in school, so they still qualify for the family cover up to 25 years. I think that is the notion behind it. Then minors who are over, sometimes maybe they're not your children, maybe you're a guardian, or you just want to take an independent cover for your kids alone. Maybe you're covered by the employer as you as a member. Some employers don't cover dependents. So maybe you have your own cover somewhere. You would like to take an independent cover for your children only. You can take an independent JCare Junior for them, the applicable rates. But maybe they're not your children, you are a guardian to them, you can take them the junior cover. New applicants aged 50 and above are required to undergo medical tests at specified providers at their own costs. In Nairobi, the recommended one is usually, I think Derek will let us know. The cost is usually around 2.5. I think Meridian also, if on a boarding of the cover, you'll be told which hospital to go to, take the medical tests if you're over 50. So if you're 49, this is your chance to get onto an medical cover express. Yes.
Meridian is correct.
Sorry? Meridian, yes.
Meridian
is correct, yes. If you're 49, this is your chance to get onto a medical cover express. You will not need to undergo the extra charge of doing a medical test. All applicants, including continuous transfer applications, are subject to medical underwriting and acceptance. And then for co-payments applicable of 2,000 at outpatient at Nairobi Hospital and MP SHA and the satellite clinics. All scheduled admissions must be pre-authorized prior to admissions 48 hours. All emergency admissions at the hospital, you'll contact Jubilee. The hospital will contact Jubilee Health within. The hospital will surely do this. This is something they never miss to do. They'll always contact the insurer. Then all hospital bills shall be paid net of the NHIF rebates. Medical cards must be run at the accredited panel. However, nowadays we have the digital medical cards. You just show, you download it and save it on your phone. You think it is more convenient. Jennifer had asked about this. A member traveling outside the country will be eligible for accident and emergency medical benefits up to a period of 6 weeks in any one trip. All medical expenses will be on reimbursement subject to reasonable and customary rates and accommodation. So the major exclusions are menopause, perimenopause and menopause, genetic disorders, cosmetic and or plastic surgery, beauty treatments, nutritional food supplements, and if you engage in sporting activity which is considered dangerous, like military, like, yeah, what is it called? Like, what is it called? Skydiving, such things, they're not covered. But I think if you're a pilot, you need to specify. If it is like your career, you need to specify on onboarding that this is your job, this is high risky, so it will be accommodated during underwriting. Fertility treatment, hazardous sports, I think I've mentioned this. Diving or riding any kind of racing, intentional self-injury, fertility treatments, and epidemics and pandemics. Treatment from consumption of alcohol, drugs, intoxication, dependency on alcohol abuse. So these are the major exclusions. Are we still together, guys?
Yeah, we're still here. Thank you.
Yes, thank you. Thank you. So once you purchase the JCare cover, you'll get a comprehensive welcome pack of the membership card, policy document, the provider panel, and the welcome letter. So I think I'll stop sharing this, then come back to, so how to apply, you review and choose your limit, then you add the optional benefits, then you fill and sign in a member application form and attach supporting documents, which are your ID, care PIN, even for the dependents also. If they're under 18, you'll use the birth certificate. If they're over 18, you'll use the ID. You pay for the cover. So Jubilee Health will revert. You'll submit the form to Jubilee Health or to me if I'm the agent. Then I'll submit to Jubilee Health. We'll revert within 3 working days. Well, so in these 3 working days, they usually just do basic underwriting to confirm, to capture your details, confirm eligibility, confirm the limits that you have chosen. So then after that, you're able to pay for your cover and you receive your welcome package. We together? So I think I'll stop sharing so that I can be able to see your questions. Are we together?
Yes, you are. Maybe a quick question. Can you do this
Yes.
online as an online application?
Sorry?
Can you apply online?
Online through the website?
Yes.
At the moment, for the standard package, no. You still need to fill the proposal form. Yes, especially if you're over 50, still need to go to the medical test, so it is not really you're not really able to do it online. So if I can take your questions before I continue with the presentations. Oh, this is still Winnie's question. Anyone else wants to ask a question before I continue? We had answered this one for post-retirement. We had answered David's question. So let me continue as you continue with asking the questions. So I mentioned the additional benefits, the digital smart cards, the annual medical checkups, the 24/7 telemedicine consultations. I think I've mentioned medical insurance is cash and carry, which means you have to pay full premium for it to be considered what? To be considered that it is now active. For it to be activated, you have to make full premium, or you go alternatively through the IPF, which is 4 installments. And a principle, utmost good faith, a principle of insurance, where we consider that you have disclosed all information and the information disclosed is correct information. In an event that the insurer finds out that you're not honest in the information you gave, they have a right to cancel your cover. Insurable interests, which is also a principle of insurance, it states that the person that you're taking the cover for is someone who you have interest in them being alive, or you are financially dependent on them. If they were to pass on, you'll be affected financially because maybe they're your caregiver, your guardian, or something like that. So this limits the issue of just taking up a cover for someone who you can't, in the African cultures, the cousin to my sister to my auntie who is my insurance does not allow that. So you either take insurance for your nuclear family, your people who you're the caregivers, your parents, or someone you're the guardian. If you want to do an act of kindness or pay for someone who's not directly related to you, you can either give them the money they pay for themselves, so that it does not now, it is not hard to trace the relatability of the payer and the person taking up the cover. So I had mentioned how to apply for the daycare. You review and choose the inpatient cover limit. You add the optional benefits. You fill in and sign the member application form and attach supporting documents. Then Jubilee will revert to you within 3 working days. Then you're able to pay for the cover and you receive the welcome pack. Other solutions include the SME solutions, which you had mentioned, 3 members and above. Corporate solutions, minimum 10 members and above. Micro solutions, these are the chairmans. And you have to have at least something to prove registration. So you must have like a PIN, I think, a bank account, the members registered. Yes, and then the personal accident. For the member, it is an added benefit, last personal accident and last expense. However, these two can be purchased separately as an additional benefit separately also. Then there's the WIBA and GPA. This is mostly purchased by the employer to the employees. This one covers medical cover, only covers for your expenses in the hospital. So WIBA and personal accident cover for your, I think someone has unmuted, please mute. Personal accident and WIBA cover for your cover for your expenses outside the hospital. So maybe you had an injury, maybe you have permanent disability, temporary disability. So they cover the two for up to a limited time period. WIBA covers, for permanent disability, WIBA covers up to 8 years of your annual salary. So it's usually an added benefit to the medical cover. Last expense, this is where your dependents are given some amount to push on you for the funeral expenses. It's actually a funeral cover, which is a very hard cover to sell in the Kenyan market or African market. Then emergency fund, this is to cushion you from all attacks that and any uncertainties that may arise, because after let's say an emergency has occurred, you've been admitted, you've been in hospital for a long time. Even after you leave, you still need some money to cushion you, and even especially if you're the principal member of the family, principal provider, you need something to cushion you after you've been away for a long time not working. Yes, and then now this is what I consider red flags generally for the insurance industry and the Money Laundering Act of Kenya. So lump sum top-ups to an existing life contract. Early surrender of the policy or cashing out too soon. Payments from third parties, e.g. a wire transfer from foreign territories. Premiums being paid into one policy from different sources. Overpayments, and then asking for a refund. Use of cash for payment of large single premiums. structuring, purchasing several policies, curiosity over the terms of cancellation. Any cancellation that you do always raises eyebrows, it lifts eyebrows all over. So unless, especially if you've canceled, for medical cover, you can cancel after 30 days. But you see, if you cancel from one company, then again, you go to another company, you also go and cancel. You go to another insurer, you also go and cancel after 30 days. It raises eyebrows. Then timing of the purchase of annuities, especially age of the customer. Because if you're if you're over 60, if you're over retirement age, really are you not really considered someone who wants to start their investment journey, or maybe take up a mortgage maybe at 64? So if you're eager to do that at such ages, it also raises eyebrows. So this is something that could flag you off. I think this is something you should take caution about. And that is the end of my presentation. Any question will be welcome.
Hi, Valentine. Just to
Yeah.
let you know, we have about 10 minutes. So anyone who'd like to ask questions, please feel free to ask. Thank you.
Mhm.
I have a question for the corporate and SME covers. Are the terms and conditions similar to the individual covers, or they are different? That's the first question. And then the second question is, usually when you're in a group setting, premiums are cheaper. So if somebody is not in a group, are you in any way able to link somebody with a group so that they can take advantage of those group rates?
Derek, I'll invite you to answer this. Go to.
Okay. Sorry, go ahead.
Sorry, Derek. Valentine, I wish to check the first question.
Okay.
If there's a difference. She asked if there's a difference if the client takes an SME cover as compared to an individual cover.
Yes.
Yes, number one is the waiting periods. As you have said, for an individual cover or family cover, the waiting periods, we have 30 days waiting periods for general illnesses, the 1 year waiting period for chronic conditions, and also 2 years waiting period for cancer. But when it comes to
Angelina, we've lost you. Derek, I think you seem to lose. We've lost Angeline. Please pick up from.
Okay, so maybe I can pick up from there. So as she was saying,
Yeah.
basically the difference between a corporate or a group and the individual covers or family covers is that the waiting periods are waived. So if you came as an individual, like the calculator Valentine was using to calculate for somebody who's an individual, the waiting periods apply for illness and for onboarding. Onboarding is 30 days. And then for the chronic pre-existing congenital conditions is 1 year, apart from cancer, which is 2 years. So you have an advantage as coming as a group for that. Then I want to dispel the logic that group cover is necessarily cheaper. Simply because there's a cost for waiving such benefits. You see, we've waived waiting period. So like now, if we look at the chart, say we are 13 people. So if we took a group cover as the 13 of us, it means once we do the documentation today, whatever premium is arrived at today, tomorrow we start cover. Tomorrow you go with your card and you have diabetes, you're treated. You go with the card and you have whatever issue it is, you're treated. Unlike the individual one where there's what we're calling waiting periods apart from the acute or accident conditions. So there's a price computation to that. So when you do your calculations, you may not necessarily find it drastically cheaper, but there's that price that comes with that benefit. Then I hope I've answered the first question adequately. Remind me the second question, please.
The second question was in regard to if you're able to link up people to groups so that they can enter. Yes.
That I would leave to you, the client, and maybe Valentine as the agent, because when you bring a group on board to now the company, say this group that we're talking on is a company, and maybe one of you is a director there, and you onboard all 12 of us there. Then when you're underwriting, it is now the contact person at the company or the group that will give us the 12 names or 13 names of the people they want to cover, and the premiums commensurate to that, and the instructions of adding and removing people. So that one, it will be totally up to your networks, and also maybe your agent to be able to assist you on that. Back to you, Chair.
Now, if for the group, you know, sometimes to work as a group, there has to be a common thing that is bringing you guys together. So you might, that's why for a chama, it's all of you have agreed. You have all agreed to make premiums. You have together, maybe you are friends also. You have common values. So to bring people together who are not also the age. So if someone who is 60 and someone who is 25, they have different insurance needs. So it might be hard to consolidate a group who have similar medical needs. That's why it's really advised, whether it's a chama, an SME, or a family based. But you can come together as a family, or most SMEs in the country are run by families. You can agree, all of you, or even a group of cousins, a group of people. There has to be something common with the group. There has to be something common which will help you even in underwriting, because an underwriter who wants to make a quotation and there are many people of very different ages, it also becomes hard. I think Derek will agree with me. It becomes hard to because the pool now becomes very varied.
Yeah.
Any other question?
All right, thank you.
Yes, thank you. Anyone else with a question? I think I can stop share.
Shall we go for the last question?
Any question? Anyone with a question?
If maybe no questions, maybe a comment or observation from from the people on the chat.
Yes, questions or comments? Yes, Angeline, we see you. Maybe as we wait for a question, we can have Mandela comment on the micro cover, the Johari cover. Mandela or even Derek, comment on the micro cover.
I don't know if Mandela's broken off. Angeline, maybe you can tackle this one. Micro, it's right at your department.
Thank you so much, Valentine. A micro cover is an affordable medical cover. Yeah, so it's an option for our clients who are not able to afford the SME cover or the individual JCare cover. So the minimum number of members is 10 principal members, and you find that the premiums are affordable compared to the individual JCare cover. And the difference between the JCare cover together, the difference between JCare cover and micro or Johari is the panel of providers. You find that the Johari cover or the micro cover, the list of hospitals are minimum, they're minimal compared to the normal JCare cover.
Thank you. Thank you. Any other question? Any comments? I don't know if Bailey is still around. You had a question for us. You're going to find out more details. I think Jennifer,
yes, I think maybe if anyone has more questions, they can bring it forward to the chat groups, or they can also feel free to reach out to you directly. We will share your details.
let me share my contact.
Yes, please.
That's my number, my email. And the general comments. So maybe we could have closing remarks from Derek and Angeline and Mandela from Jubilee.
Valentine, I don't think your details have shown up.
Oh, they've not shown up? Oh, no.
No.
I'm not sure now.
Jennifer, I can see them on my end.
You can see them?
Yeah, so can I.
Oh, okay. Sorry, I couldn't see them.
Yeah, maybe we could have closing remarks from Jubilee side. Then Jennifer, you represent the investable side.
Sure.
Okay, thank you. Maybe I can start just to echo what Valentine has said. I think our strength in the market as Jubilee Health Insurance is our customer service and customer experience. We take that very seriously, and that is why the clients who take insurance with us, as long as the policy is well understood, have a seamless experience when they are accessing medical services. And the systems that we have do not need the back and forths that is normally experienced with the insurance industry. So that is our strength. And I think that is why you should consider, if you're considering insurance, you should consider Jubilee Health Insurance based on the customer experience bit. That is it from my side. Back to you, Valentine.
Thank you. Jennifer, any closing remarks?
Yes, I would just like to say thank you so much for this presentation. I believe myself and everyone else I have found it very productive. I hope everyone else has. And it's been a lot of value added. And I hope all your questions also have been answered. So thank you, Valentine. Thank you, Derek. And thank you to the whole team. And yes, and I would also like to thank our team on this other side, Evelyn, Corey, a lot of hard work behind this. So I would like to thank everyone, and we welcome you again in future. We will also put forward your details. So everyone, please feel free to reach out, and thanks for the amazing evening. I'll hand it over to you for the closing remarks. Thank you very much, Valentine.
Thank you for that, Jennifer. I'd say really, I am really grateful that you have attended this webinar. Thank you for the opportunity. Thank you for listening, and thank you for your participation. I hope you onboard the medical covers, especially for your parents. I've been getting so much feedback from you guys, especially for your parents covers. Please reach out to me. I'm available. I'll do a quotation as soon as you give me the information. Please refer me to your officer, to your employers, your HR managers. We're also able to do SME presentations and corporate presentations, and even respond to your questions. Especially, I really hoped Bella would still be there. We would, if you have questions, actually, just generally on medical. And I highly recommend Jubilee Insurance, especially because they are of the telemedicine aspect, because sometimes you're not able to go to hospital, but you still need medical care. And the digital cards, I think that's something I really enjoy with their covers. And generally, I think medical insurance is something that you need as an added value addition to you and your family and to your loved ones, and you can buy for them as a gift. Just to know, just so that some of them may not think it's a gift, but it is actually thinking of their health, is showing them that you love them. So thank you so much for your time, for your questions. Thank you for engaging. And please reach out to me for more. Thank you so much. Yes.
Thank you very much, Valentine. Thank you, everyone, for coming today. Until we see you again for the next presentation, stay safe, obviously, for the elections. I'm sure we will. Everything will go well. And I wish you all an amazing evening. I think, yes, so this is the end of our presentation today. Thank you very much. Bye for now.